We can speak now to Chief Market Analyst at GTC, Jameel Ahmad. Jameel, what is the market impact so far from this latest volley of trade tariffs?
So due to this news coming out over the weekend, once again, it's like putting a cat amongst the pigeons in terms of a widespread different market reaction of investors being concerned. Overall, it's risk off, where you have world markets pointing lower. You have cryptocurrencies have seen somewhere near 2 billion wiped off their market valuation. A number of emerging market currencies have also fallen towards new record lows, and such weakness is likely to continue for as long as these trade tariffs continue to be threatened and implemented. The only winner from the scenario, once again, is actually the greenback, the US dollar, as a result of more of a pro-America stance, make America great again. Investors are using the greenback as a safe haven asset. What I would point out that maybe we can pay more attention towards moving forward is actually gold, because the more concerns that this has over the world economy, slowing down further, additional downside risks, it's likely to point more investors towards the attention of a different safe haven asset in the precious metal of gold.
Now, Jameel, Canada, Mexico and indeed China have all said they'll hit back with retaliatory taxes. What impact could they have?
It's a further downside risk to global economic growth, and it comes down to whether these tariffs are really going to be implemented for the longer term, and whether this might actually just be a negotiating tactic from the US White House in order to attract better trade terms, which is a likely scenario. Overall, though, we do have some precedent from the first presidency of Donald Trump, and when he did have that tit-for-tat trade tension war with China around 2016, 2017, this did lead to the weakest level of world economic growth since the beginning of that decade. Clearly, if these tariffs are implemented and if they do stay in place for some time, we're likely to again see more downside risk toward economic growth and probably some more milestone lows. Of course, not towards those COVID levels. One other thing, though, I would point out is that we're not looking at so far, but we should look at is the impact on commodities. For example, oil seems to have popped higher. But if we do have more downside risks to world economic growth and concern over demand for commodities, and of course we have concern of demand for oil, and I do think we should also look at the oil space as well.
Okay.